Hello, and welcome to the SHS podcast, where we provide valuable information to business owners and entrepreneurs. Today, we're lucky we're joined by Horacio Chacon, Vice President, Senior Vice President, I should say, of Sandy Spring Bank. So, welcome, Horacio. How are you?
I'm doing well, thank you. It's good to talk to you, Stephen.
Likewise. Thank you so much for joining us. Listen, before we get into the meat of things, give us a little bit of background as to who Horatio is. How long have you been in the banking business and your experience?
All right. So my name is Horacio Chacon. I was originally born in Chile, in Santiago, Chile. I've been in the banking industry since 1982. I started with a small savings and loan called Standard Federal Savings and Loan. After graduating college, I was lucky enough to go work for a brokerage firm called Tucker Anthony. And there I joined DC National Bank. And I've been in the commercial loan area since that time. That was about 1986, Stephen.
So you've been through the ups and downs of the market and working with businesses all the way from the 80s through today.
Absolutely. And
It's
all the changes.
been a big change over those years. I know I remember them all. So listen, it's amazing to be able to have, a resource, that has over 30 years of experience, right, in the banking world. So let's get into the meat of things, right? As a business owner and with COVID and the business challenges that we faced over the last year, it seems like it's just become harder and harder to get lines of credit and business loans. So what can business owners do to improve their odds, right, of getting loans from a bank, whether it's a line of credit, whether it's a term loan, secured, unsecured, whatever that is? How can they improve their odds?
All right. A couple of things to keep in mind. One of them is that the business owner needs to do a little bit of research. Different banks do different things. Some banks are more friendly to whatever industry that they may be in, and less friendly to some of the industry that they may be in. So the owner's got to spend some time and say, okay, let me talk to Bank A. This is the kind of business that I'm in. Do you have an interest in banking me? And also ask why they're interested in banking me and what kind of experience they've had in the past. Another thing I tell them is have all your financial records up to date. A bank's going to ask you for year-end financials, historical tax returns, historical accrued income statements, if you have those, balance sheets. Also, a good set of interim numbers that are less than 90 days old. Also have a good description of the owner's experience and what they add to to their business. So that has a lot to do with it.
So experience and knowledge essentially in the business. So you
Absolutely.
just literally covered, I mean, three really important points, right? Number one is the relationship you have with your bank, knowing what type of industry. So if you're medical practice and the bank likes medical practices, or whether you're in real estate, whether it's owner occupied or rental property, like finding out what the bank's preference is, right? So that's one thing. Second thing, you had mentioned is the financials. So having your financials up to date and having that financial information ready, right, is important. So what are the things besides those, as well as I'm sure a very strong relationship with your banker that you start way before you actually need the money?
So one of the things that people always seem to miss, the business owners, is that with a lot of small businesses, they're privately held corporations. So not only will we be looking at your business, we'll also be looking at your personal credit and your personal assets. So keep this in mind. A lot of times that we will want to, if you have a house as collateral, unfortunately, for the better or the worse, we are going to be wanting some additional collateral if the business assets just aren't there. A lot of times when these small businesses, you have a lot of intangible assets. And intangible assets are considered more or less everything else except real estate.
Mhm.
So if you have a credit report or you haven't done a credit report and find out what your credit's like right now, get that reviewed now. That's important because character has a lot to do with it.
And so can a business owner, even if they don't need credit at this point, right, can they do a check with you to see what they would qualify for? And is that smart to do that in these times right now? Is it smart to have a line of credit now?
It is smart if you can get one. A lot of banks right now are, a little more cautious than they were a year ago. And it's become much harder to get a loan. Now, keep in mind, though, I'm glad you brought this up. Keep in mind that banks are not the only source of financing these days. Credit unions is also another great source. And so check some of those out. There's a lot of credit unions out there that are doing business financing. And there is a whole new evolution, what I call the evolution of non-bank creditors that are out there. You may hear them advertised. The interest rate is a little bit higher, but in a lot of cases, if you're looking to borrow $50,000 or less, it may be good to look at some of these online banks and non-banks to see what they offer.
Mm-hmm.
That's where I see the industry going.
Mm-hmm. That's interesting. So the traditional, I should say, a banking relationship, I think you can confirm is actually even more important today than it was even last year.
Yes, it is. Yes, it is. And the reason why that is that eventually you're gonna need cash
Mm-hmm.
for whatever reason that is. It's much better to anticipate that need and have it now. It's like that. It's that old joke that people used to say about bankers is that never ask a banker for an umbrella when it's raining. Always ask him on a sunny day.
I like that. I like that. So give me some insight. You had mentioned that it's harder today now than to obtain a loan than it was a year ago. Can you give us some insight into why that is now?
That has to do with the fact that when the economy starts to get a little bit more wishy-washy, that's not a good word to use, but I'll use it here. Bankers become much more conservative. So a year ago, if you wanted to finance an owner-occupied property, we would go 85% loan to value, purchase price to value. Now we may only go 75, 80%. And if you own an investment property, it's even lower than that. A lot of banks right now are not going higher than 70% loan to value. That means you got to come up with 30% equity.
Mm-hmm.
You look at Washington, D.C., you're not going to be able to get anything under $1 million. Can you come up with $300,000 in cash?
Yeah, that's pretty incredible today. Now, is
Yeah.
that just commercial? Is that also on the residential side? If you're investing in family or stuff like that?
That's primarily commercial. Yeah, residential is a much more vibrant system that they have in place, and you have a lot of non-bank players that are involved into commercial to residential, excuse me, purposes. And also, what's nice about residential is that you have Fannie Mae and Freddie Mac that act as a backstop and will buy your assets. So you have a lot of non-bank players that what they do at the end of the month, they bundle up all those loans, sell them to Fannie Mae, Freddie Mac, via their, through them to investors. And all of a sudden I have a batch of cash available to relend.
So at the end of the day, from the commercial side of things, I mean, what I'm really understanding from you is that the best thing to do is to build a relationship, right, with your banker from day one. And the second thing is to make sure that if you are going to move forward with requesting a loan or a line of credit, right, do it when times are good. So that's a little bit easier than when times are tough. Irrespective of that, having your financials in order, having a great credit score, not carrying a lot of debt, all of these things help. And being organized, I should say. What do we say in the bookkeeping world, right? Penny wise and pound foolish. Like, don't not enter in your bookkeeping, right, and your financial transactions into a system. Because if you don't do that on a regular basis, number one, you don't know your financials. And then number two, you pay for it in the end when your banker is asking for financials and you can't produce anything that's accurate.
Absolutely.
So
Absolutely. Yeah. And
kind of
even if
fun.
you start with something small right now, a lot of the banks out there, especially some of the bigger ones, they'll do $50,000 unsecured. You may not need it now, but it doesn't really cost you that much. And it's a good form of working capital.
So best kind of client, right, is a client who is a business owner, who has a good head on his or her shoulders, who has a profitable business, financials that are updated and accurate so they know how they're doing, and are able to produce all the documents that you need to show that it's a viable business.
Exactly. That's exactly right. Because that gives us a lot of confidence. When and these days bankers are asking for a lot of information. If I go to somebody and say, hey, I need the following 10 items, I'm exaggerating a little, but let's just use that number. And somebody says, no problem, I can get those to you. That immediately gives a banker confidence.
So let's throw out kind of an oddball question here. Has PPP loans made the line of credit or other loans, right? Has that made it more difficult to get those loans?
No, they have nothing to do with this.
Okay.
The advantage of the initial PPP program was that they were, first of all, non-recourse. Also, they were unsecured, so that it doesn't hinder your business or your personal assets. They're still out there, and there's still a lot of unknowns, but the PPP program should not affect your future borrowing abilities at this time.
Great. Well, Horacio, thank you. Really appreciate the information. I know that our viewers definitely get a lot of information from our podcast and our videos, and this is no different. So, you as a senior vice president of Sandy Spring Bank, you've got years and years of knowledge, and I appreciate you sharing that with us. I guess if anybody wants to get a hold of you, they can call you at the office, right? 301-841-9583.
Correct.
Awesome. Again, thank you. And we will definitely catch you hopefully on another podcast when the new administration comes in and there's other banking surprises that we need to talk about.
Absolutely. You know where to find me, Stephen. It was good talking to you. Thank you.